Welcome back. As we wrap up last week's trading, we see that the probability right now that the Federal Reserve will not raise interest rates stands at 91%. 91% that the next meeting will have a 525 to 550 range. There's only a 9% chance the Federal Reserve will raise interest rates to the 550, 575 level. Last week we had a slew of Fed speakers, which certainly did give some tone to the market and to the expectation of future interest rate decisions. Federal Reserve Chair Jerome Powell, in part, said we are not confident that the benchmark rate is sufficiently high to reduce inflation to 2%, the Fed's targets. We know that ongoing progress towards our 2% goal is not assured. Inflation has given us a few head fakes along the way. With inflation headed in the right direction, it would not be appropriate for the Fed to increase rates right now. If it becomes appropriate to raise rates further, we will not hesitate to do so. One of the big takeaways was that the Federal Reserve may, in fact, not be done raising interest rates. We've had some months of good data, but overall, it's not a slam dunk. He also says we will continue to move carefully, however, allowing us to address both the risk of being misled by a few good months of data and the risk of over tightening. So it's a very, very careful balancing between tightening too much and not enough. This is where the Fed funds future stood on November 3rd. The green line represents the chance that the Federal Reserve will reduce interest rates. The first time we see the chance higher than 50% is in the May meeting. There's a 64% chance, or there was, we should say, as of November 3rd, a 64% chance the Federal Reserve would reduce interest rates in the May meeting. There's an 11% chance the Federal Reserve will raise interest rates in a January meeting. 11% and 64, fast forward to present day, becomes 22 and 59. So there was an 11% chance the Federal Reserve will raise interest rates in January. That's now 22% they'll raise rates in January. There was a 64% chance the Federal Reserve would cut interest rates in May. Now, the first meeting where the Federal Reserve has better than a 50% chance to reduce interest rates is not May, but now June. What has changed? The percentage chance that the Federal Reserve will raise interest rates in January, that went up a little. The greater than 50% chance the Federal Reserve will reduce interest rates, that was May. Now, the better than 50% chance, that doesn't occur until June. So essentially, inflation is a very stubborn force. It's not going to go away so easily. And the Fed funds futures are reacting to the Federal Reserve Chairman's statements. And of course, we have to look to the economic calendar, specifically inflation numbers, but not only that, durable goods. The GDP was just released on a very strong note. Meanwhile, jobs numbers were weak. So again, Federal Reserve is a very careful balancing act. They don't want to over tighten, but based on the data, at least so far, it looks like the Federal Reserve is a little bit closer to raising interest rates. How this translates into the stock market, well, that will be left to be seen. But for the time being, based on the Federal Reserve's comments this past week, we're a little bit closer to an eventual interest rate hike. We're going to follow the economic calendar this week and be sure to update you along the way with any significant changes. We hope this has been helpful. We look forward to seeing you back soon.